It's the Crypto Sniper. How are you? Welcome back. Yes, your big friend on the Twitterverses and YouTubings that have been warning you that in actual fact we're having a very bullish pullback. That it's a very bullish pullback, and in fact we're going to have a surge of Bitcoin strength incoming, and as is typical, Bitcoin dominance runs ahead. We've also highlighted to you on Bitcoin dominance that in the early stages of moves you get the Bitcoin moves first before the others get permissioned. We did say to you it's quite possible that the 25k will in fact be revisited for a run. So we're going to dip into all of that and more, and why this is now, in our opinion, a quite high probability, on balances of probability, talking about the future. Who knows? Gainser could come out and say something really eccentric. We don't truly know. But on balance of probabilities, in this environment, we feel a reversal level has been run, and that Bitcoin is in fact along for at least through 28k and potentially breaking out of a flag that could see it begin its move towards that larger target that we've continued to espouse of $40,600 plus dollars, that could potentially see it even run 42.5. We've got another key level at 47.5. Let's go to the charts and talk about Bitcoin and why this reversal. Yours truly. By the way, let me just ask, how many of you took advantage of that 24,800 call to the downside for loading up some longs on Bitcoin, or even putting in a technical trade or two on lower time frames? We'll be showing you how many. If you are impressed by that, hit the like button, or alternatively the link, the very first link in the details below. Book a call. It makes such a difference to get your entries right. Bitcoin now trading 26,400. What comes next? What we think comes next in this video. Let's go straight to the charts. Okay, welcome. We are on the 8 hour here, and this has been the extended pullback period. We spoke of since 14th of April, Valentine's Day. Oh, the final highs and then a fizzle. You all know what I'm referring to when we talk about fizzling on Valentine's Day. Down, down, down in that channel all the way back to the 24.8 run, the key level of significance just run. That's right, that was 25k. We've continued to highlight that 25k. For those of you that are new to the channel and are just seeing this for the very first time, what have we been saying? We've been saying that overall you are in a reversal structure here. Ooh, we got to go a fatter Koki than that. Fat Koki time. That blue line is your 25k neckline. That is in fact your head, and you had a super dip head, super fast break with momentum, and then a trot through to run about the 31,000. Now you've been in a pullback stage, which has been brought about by yours truly, the ever clear and super clarification squad of the SEC in the United States, that is chasing all forms of exchanges, various forms of stable coins, and various other tokens, all declaring them potentially securities. That's right, that's right, that's right. Bringing more lawyers on their back, more headaches, and bringing to a head the day that they have to finalize and clarify what in fact is a security. So as I've said before, the escalation of this endeavor is actually a beginning of the end of that endeavor and is inherently bullish. So you get the short-term pullback, which is the gift entries in the uncertainty, the super aggressiveness and the reach and the territorial grab and everything else, which puts a restraint on prices, but in actual fact will force the SEC to actually make their position clear. Lots of alerts on there that you can see. Are you using alerts? Do you know when to use them? Of course, during this period that we had this piece of price behavior, we'll drop it down to the 3-day in fact, and we'll say goodbye to the weekly. You can see also that we had run roughly up to another key level that was the flag over there, which was part and parcel of the bear market where we kept you out, which included also the rising wedge. Don't buy it, don't buy it. That was now the left shoulder of an inverted head and shoulder that you've been watching here, that has occurred with the final right shoulder there. In other words, the invalidation point has always been the 19,500, the run of that low, and we have not felt that that was going to happen, and we've highlighted the channel And actual fact, more recently, the acceleration of the squeeze across the tops that are going to lead to a pop just as the neckline revisit occurs. This is the beauty of price behavior. So of course you run into a bit of heavy traffic over here when you are roughly through the midpoint of that flag on the downside. That is how price behavior works. You also break the key levels with real strong momentum. Did you buy the 24.8? No, sir, no, sir. 3 bags full, I didn't. Okay, well, that's on you because that was a gift given to you. And as we got closer, we continued to assert it was more and more likely that a technical run would need to occur. How would you have chosen 24.8? What about 24.3? What about 24.2? Well, if you were in the community and you clicked on the link, or you had done the training and understood fractals and various elements of HVF method, this is what you might have seen dropping down to a lower time frame. Let's take you to the hourly, right from 3 days. We're going to dump it right into the hourly and show you the magic that is. And people say, oh, technical analysis doesn't work. Technical analysis doesn't work. No, because you can't do something properly doesn't mean it doesn't work for other people. I can't play a guitar. My hands just don't fit. The fingers don't go where they're supposed to go. But that didn't stop Eddie Van Halen from being Eddie Van Halen. Okay, so because you can't do charts right doesn't mean other people can't. And it's a good idea to learn as a skill generally so that you can at least see what is possible with it, because quite a lot more is possible than you think. In actual fact, because of the disproportionate impulse here, we would have treated and did, as drawn and explained to the community recently, that the only thing you can consider as structure was this grinding behavior. That was quite clear. Another downside move was required. Grinding behavior, dupe, 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 and in it goes. There you go with a low and then the high, and that is your 3 impulse zig and zag that saw the break there, that had a target there. That gave you 24,894, the final low, my friends, 24,750. That is by dropping lower time frames. And with that, the blue line, the 25K, is just run. The key levels of significance are just run. That is one of HVF method's key rules, and we said you must break the 25K. Why? Because lots of orders are going to be sitting at 25K. They won't all be fulfilled at 25K as the stack suddenly hits key levels where lots of price behavior and limit orders might be set, including stops, a bit of a running of the ladder both up and down, sees technical levels just run out, and the more you run out and you run through, the more the snapback rally as the value buyers come back in. Beautiful, beautiful bull flag. Beautiful bull flag on the lower time frames, right there for anybody who understands any form of technical analysis, even on a lower time frame such as the 1 hourly that we are now talking about. That is 1 hourly technical analysis. Yes, and then, good friends, you had a technically stretchy candle. Of course, a look one way, go the other way. We give it a name because this is a flush out candle. It is extremely bullish, but it is a nasty one to have to sit through. First, you get terrorized. People that chase momentum get absolutely terrorized out because it goes down in one way first. This was all a red candle during this period. All a red candle during this period. Flushes out the technical stops just at the lows of the wick of the bullish candle that tested to the downside, and then smashes it all the way back up past its open, closes higher, breaks the technical flag and follows through. Why? Because when you break our funnel levels that are significant, you do so with momentum because you came up to that level and you resisted. You said, we've done a lot of jogging for one moment. We're going to have a rest. We're going to wind up. We're going to check, are we good for the downside or are we really going upside? Flush out all the weak hands, smash it with momentum through. Oh, you guessed it, 26,400, our expectant neckline where you might have a little rest and a little dip back, which could in fact then give you all of this as a left shoulder, this all as a very nice head, and any dip here as a right shoulder, which for the hourly time frame would be the beginning of setups to the bullish side that would generate a structure that would take you through the 28,200 level broadly as part of a next stage of rest before going higher. Okay, so this is what we anticipate. Possible light comeback. You shouldn't chase in just here. Note the marginally higher high to that one. That is a technical resting point. It ran with real momentum up there. It took a lot longer to come down. You had to come down from there. It was zigging and zagging. It took quite a few bounces before it got its stamina up to give you that final run, which of course was FUD and various other general news related fear and loathing. Who knows who said what? I don't even have to care anymore. I trade technically. In other words, the other side of the coin is the technical analysis. You can have the fundamentals here, but actually the information on what it is truly is on the back of the coin. And you're looking at the same goddamn coin. You're looking at the same goddamn coin. In other words, you get the answer before when you learn to read the technicals. That's right. You get what time it will be before you get to do the technicals. That is the nature of the game. But most of all people, here's a home truth, are entirely narrative driven. Everybody wants a story. You're like children waiting for daddy to come and give them bedtime stories. Without a narrative, there's no sleepy bum-bums. I'm really, really sorry that that's how it is and that every one of you needs a narrative. Sometimes you just read the technicals, you get the trade, you're in it before anybody else. The technical break of 25K, you heard here on this channel repeatedly on 2, 3, 4 videos before this even happened. This is the most bullish pullback. You may get a technical run of the 25K. I don't expect it to go far beyond that. As we got closer, you got real targets that gave you 24,894 on what ended up a low on the very bottom of a minuscule wick, 24,750. Literally rounded up to 24.8. And you got given that target with this fractal and this downside. And I'm already scenario casting the next levels that will run as part and parcel of the upside. Don't forget the 40,600, the possible technical run of the 42.5, which was a neckline. All of these things are sitting in my level on how we go up because they were key. No one else drew them. How many other people on your crypto YouTube watching channels of all viewers, how many of any of them, Peter Brunt, Gareth Soloway, anyone, so-and-so, Moon Boys, Ran, Spanter, all the crowd. How many of them said you're going to get a small technical break of the 25K, and not once, but 3 or 4 times, and said that is going to be a buy, and that you could have got that, get a major turn, and that we are already in a reversal, and you will be able to load up at something 24 high hundreds. And that if you'd been in the community, you could have done, if you understood HVF method, you yourself could have drawn that fractal and seen it and known why you're drawing it and understood and seen the technical run that took place. How many? If there was anyone else, don't hit the like button. If we're the only ones, hit the like button right now. Go to that link in the description and say, I need HVF method a la the crypto sniper to help me build my wealth in this crypto run. The difference and multiple will make all forms of cost of coming on board real investment absolutely minuscule. That is a fact. It'll be the best investment you ever make, in my opinion. 14 days, money back, no quibble ever given. Okay, there you have it. If you aren't booking a call, you don't want to maximize this bull run as we go into totalitarianism. In short, you don't want to be a wealthy person who can buy a whole bunch of freedom. You would like to be a poor, impoverished, battered slave relying on his UBI and government. That is where you are if you don't do it. I can't get any more emotionally forceful than that. Okay, so what comes next? Well, you would have noticed also we mentioned Bitcoin dominance. The early, when you turn, it's always Bitcoin. And how many of those same people that you are watching that are making technical prognostications on the Bitcoin said that we are facing a turn in the Bitcoin dominance, and that because people are still wounded and hurt, the money will come in for Bitcoin first? You are approaching the 50%. How many other people even have the 50% line drawn on their charts when they show you Bitcoin dominance on those video YouTubes? And have even suggested that that possibility could happen, and that you are now congesting on a box that you haven't broken out of for absolute eons. I have to go up to the weekly time frame to show you this. This chart hasn't changed. These boxes haven't changed. You fell into this box, my friends, in 2021. You fell into it April 2021. It's more than 2 years, and Bitcoin has not escaped that. The reversal with marginally lower lows highlighting the resistance and the support the support at the 39s through to 42s, the resistance that continued to come in and around the 47s, that have seen you have extended hang time, this time at 48, where previously you were consistently knocked back. Consistently knocked back, consistently knocked back, consistently knocked back. Zero hang time saw you now spend an entire box worth, which points to the fact that you are not being smashed away, that the market is currently valuing Bitcoin at such a long bear market that the first mover will be the God market this time. You are now breaking to the upside, and that 50% dominance that very few others are even talking about on crypto Twitter, and any of the others are discussing. If you have anybody else that was pointing out that you're likely to have a real attempt at the 50% dominance, please do not hit the like button right now. If we are the only ones that have kept you up to date on this and this potential turning, which could see a rally through the dominance now being more in Bitcoin. In other words, market cap is more about Bitcoin than all the others put together, aka it's through 50%, 0.0001, then you can hit the like button and share. And that is a key move that is taking place at the moment. And I warned a couple of times that this could be a maxi season, that they're going to be getting in your face, that they're going to be telling you it's all about us, it's all about us. It will also see at a later stage far bigger moves in other tokens that will bring it back down, I suspect, in time into this orange box. But initially, for this recovery from what was a top out high in 21 of 64K, ended up a second chance at 69, has actually seen Bitcoin be trapped in this range. And as we assert bull, the initial dominance is the honey badger himself, and he is moving to the upside. So you should actually be trading long whilst investing in our favorite alts, which will be one of the earlier ones to run as we pivot into alt season. So you could have some investment Bitcoin, some investment alts. We have also said to you that Ethereum will be coming back. It got hard hit. It will be in exactly where it needs to be. That is still coming, and we'll cover it in this video as well. In fact, no better time than right now. But before I do that, did you actually see this? Are you following on the Crypto Sniper on Twitter? Let's go have a look. Let's go have a look. We even posted a neckline revisit with a magnified portion highlighting the falling wedge that was also forming inside that channel. So there was the channel. You can still see those lower levels and upper levels there as well. But we were highlighting, as the SEC was getting involved, you were getting a squeeze along the lows into the channel that would drive you through the 25K, only to give you a catapult back up, which would see you over here, which is roughly where you are here, in and around similar key levels that had existed from previous downside targets of those same head and shoulders. Yes, the only guy that told you you are sitting between two head and shoulders bookmarked for your bull and bear market, for which this is the reversal bear market, has stayed consistently bullish after staying consistently bearish when it was time to be bearish. So what should you be doing? You should be actually contemplating small possible leverage longs on pullbacks, given that you didn't take the 24.8 that you didn't receive because you're not in the community to even see it or understand the detail of fractal downside targets making, because you haven't gone through it, you haven't learned it, you do not trust in process yet. It's all just new. It's some dude on YouTube yakety-yakketing. So let's go to Ethereum and say, when Ethereum start taking over, well, everyone's going to be a bit too soon. It's still got a way to go to run 50%. It's still going to take some money, but Bitcoin is at 49.74, and I expect the key level to be run. The key level to be run. That's right. We do also have that heat map. Let's find that heat map. As you can see, in the majors, which we're going to put in here, the two best tokens are still green. For our Mon, we like Tron, we like XRP, and those are both in the green for the 1 month performance. In the green. Bitcoin is 2.6% down, but that is quickly turning for the 1 month performance. ETH is 5.6. By the way, Binance 23% down. 23% down. 23. Sol, it's as bad. It's as bad, friends. It's as bad. So looking at the 7-day analysis, you can see Binance 10 going on 11% down. Cardano, people love Charles Hodgkinson. We've continued to say it is underperforming. Solana, underperforming. Matic, we did an entire breakdown on how the top 15 will look like, which are going to be fallers and which are going to be climbers. Those that are outside the top 10 that are coming back in, and all those that were going down. Who's falling hard, who's going to generally give up a little bit but not too much, and who's going to pump in the top climbers. That's right. We did it right the way down. You can see how Binance USD has obviously fallen a long way as a stable coin used to be top 10. Many of these things are absolutely predictable via the technical element. If you would like one day a YouTube for us to do something similar for you on which ones, just through assessing the dominance chart of the individual tokens in the top 15/20, who's going to be falling out the top 10, who's going up, who's going sideways, who's going mildly up, who's going up first but then sideways. We did an entire breakdown of those tokens and how they will look for your future 6 months from now market cap leaders. That tells you which tokens you shouldn't be holding. Unfortunately for you, ADA is consistently one that we see as underperforming. Unfortunately, we see BNB underperforming and have had it as such after calling it as an overperformance pre-FTX that saw Binance become the sole major exchange, that saw it run on the Binance dominance. People must realize that nobody else in crypto gave you Binance dominance pre the FTX move. We never joined the dots. I still say it's something I curse myself for. We were high conviction on the Binance dominance during that period. Look at that chart. Let's just remind people of what was said, what was done. Here were your structures. We said to you, you're going to 6% from down here. You could have got in the threes, the upper threes, 6%, and since then you have fallen. After your targets, you close. Look at that run, you got up to about 6.3, down, SEC, major attack vector on their stablecoin and the exchange and their American customer handling, all of it. This was your pre-FTX era. It literally was calling the FTX dilemma, and in fact you got CZ of Binance dumping FTT and tweeting about the fragilities of FTX as part and parcel of that. The news before the news, when we called that prior to him doing any of those things that led to the run on FTX and its subsequent crash. That is called the news before the news, my friends. We got the trade with Binance token dominance, but we didn't get the story. And unfortunately, we were caught by some of the story. So we weren't that clever. We miss things. We get things wrong too. Also, Solana as dominance. Let's give this to you. It is losing ground, my friends. It is losing ground. This is one token, as I say, we could see potentially falling, not just out of the top 10, falling out of the top 30 or 40. Yes, that will scare some people. Yes, it's going to get a bit of a bid now. You can see that wick is bought it up. You can see it got bought up there. So it will climb in dominance a little bit for a while. But this overall structure is of great concern. So don't go short it now and say I was wrong. I think it's going to potentially go a little bit up before it goes down. In dominance, that means also in relative price compared to the others over a period. But I don't think by that much. I don't think there's much magic left anymore in people's perceptions of Solana, and I think that this one could in fact fall to less than 10% of 1%, so 0.1%, less than a tenth of 1% in terms of dominance, which currently where it is standing in and around the 0.6s and 0.7s means it's 1/7 of what it used to be. In short, you are hearing me make a Solana call that says it won't even be in the top 20, in my opinion. It's going to fall out of the top 10, it's going to fall out of the top 20, and you could find it somewhere between 30 and 75 in the not too distant future. But it won't be tomorrow. You could do that up and over, and then a final one, and then it starts to skid. In short, we expect it to be shown as one of the shooting stars that fizzle. Remember crypto.com, it was in the top 10, now it's not, okay? In other words, you need to understand these things. And that is one of the reasons why we've always focused on the top 10, and we've always focused on dominance, and we've always done relative strength assessments. So which are the tokens that in time are more likely to get more of a snapback? Initially, I think Bitcoin is going to be one of your safest bets, but we remain on XRP as someone who will come in the not too distant future on the dominant side for upside, getting a little bit of a rest here. This is very positive structure generally for the upside. It's made a nice strong high, so there's the dominance of the momentum up, bang. This is reaching a point where it's truly dominant on the up. Let's go again, let's draw it again. It's drifted down, it's got a surge, drift, and surge. It is actually triggered. This is a feign and break. It breaks and feigns back in. So we don't necessarily think this will be too long. We think it can come around and then go again in dominance. And you're hearing it again, 6.2 plus with an overrun. I do expect overperformance on this. This is the first in the new trend. We have overperformance techniques that we do not get into in the YouTube that you can benefit from if you are in our community. First link in the description. Click, book a call on a time that suits you. Show up. Someone else is waiting for you. Show him the respect, and we have good guys. Absolutely, you buy. There is no salesmanship. You elect to be on board. It is a community of the willing. And we have a 14-day money-back period. Okay, that's it, guys. That's the pullback. XRP remains strong, but currently getting a little bit of a send back. So I would utilize, if you haven't got any position in XRP, you can do dollar cost averaging each day, that it's a red day. I'm not on a daily, I'm on a weekly. So you could do each day, it's a red day. You do a certain job lot of accumulation. It's climbed nicely. It's getting a little bit of a slap in the face. Accumulate, 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 accumulate. Green day, do nothing. Red day, accumulate, accumulate. And so you can play it. You could do something like that. That is not advice. That is just sometimes something I do on something I've decided I wanted from the macro charts. However, in the meantime, expect Bitcoin dominance to run the 50% and everybody else's dominance to be a little bit whittled because the biggest man in the room is getting bigger. He's got to pick up 49.7. He's got to get another 0.25%. And that's a lot when you're already over 500 billion. Okay. So there you go. That's our update for you. Crypto is a reversal on its pullback. It is a bull market on a macro reversal that is the inverted head and shoulders. It has been in on a lower time frame, a pullback stage. That pullback stage, in our opinion, on balance of probabilities, is now complete as after running the 25,000, and hereafter you will begin to make strides towards going further upside with a short-term target of 28k, maybe a possible rest after that, and then thereafter towards the bigger levels that we have given you from the higher time frames. If you want those rehashed again for you because you haven't watched the videos and this is your first time, go and hit the subscribe button. Do not forget to subscribe to the Market Sniper and the Crypto Sniper. Here is those targets, 40,600 on the inverted head and shoulder. That is the seminal reversal that we believe has indicated that you are no longer in a bear market. And we will clone it for you and put it in. And there you can see that target right there. I do warn you, there are other key levels of 42.5 and a blow off that could see you revisit these. These are macro head and shoulder necklines that dictated the highs of 64 and the highs of 69 as part and parcel of that down leg move. Till next time, hit the like, share. This is the Crypto Sniper signing out. Goodbye for now.